Don't wait for tomorrow. Live for today. Keep chasing the sunshine and go out and play.
Hello, beautiful, beautiful people from the internet. How are we doing today?
I think we're doing great. How about you, Janie? Internet to Janie?
It's always a great day. I had a fun day shopping today for one of our cottages, turning that into a short-term rental. So that's very fun. I got some really wonderful pieces. So I'm very excited about that. Yes.
Amazing. So are we ready to have a different type? We're going to close out this Blueprint seminar series with your questions. Now, for the last 3 days, we've been giving hopefully a ton of value, demystifying, busting myths, destroying limiting beliefs, giving you golden nuggets, showing you the opportunities in the deals and also in the timing of US real estate investing. But there may be some more specificities that you would like to have answered. And so that's why today, that's what it's all about. Any question that you have regarding this blueprint, this what we've covered, the upcoming blueprint, whatever's on your mind, we are here to answer your questions so that you have the most fully educated decisions ahead.
Absolutely. So, Kyle, let's get started and remove that that big blueprint screen. So that, there we go. We can be up close and personal with everyone. So, voila. So we've been compiling a couple questions. Quite a few people actually wrote to me in a private message. So I understand that some people are shy and some people want to remain anonymous, and that's okay. But know that this is it's a safe community. We're all here to help each other, and people in this community are here to support one another. And if they don't, they are kicked out of the group. We don't allow people to crush. We don't allow sharks. We don't allow people that that step on other people. So if you do see that happening in the group, we do have a couple moderators in the group that see everything, that oversee everything, and approve posts or don't approve posts. So if you see anything, you can always flag it to one of us, and we'll make sure to address that. So that is a zero tolerance in our world. So I do appreciate all the questions that you guys have asked us, have sent us in the last couple of days. And so we'll get started because they're very good. So I did write a couple of the questions I received in my inbox on the thread. And also I have a couple that I wrote down here on my Remarkable. So I'll go ahead and get started. And a couple of people did send in their questions. Now, if you do have any other questions, you can feel free to write them up in the chat. We have about 45 minutes for you today. So we'll do our best to go through everything as much as we possibly can. But we have a hard stop at 7:45 because we have our premium mastery call at 8 p.m. All right. So are we excited? Kyle, are you excited?
Always excited.
Amazing, amazing. Let's just take the time to see who's with us right now and say hi to those people. So we have AZ. AZ's in the house. We have Brian, Chris, Danielle, Francois, Julio, Catherine, Kimberly, Mahela, Marvin, Patrick. We have Peter, Romel, Rory, Terrence, Trina. Wow, and that's excluding our Facebook family. So that's amazing. Amazing, amazing. Hi, everyone. So happy to have you here today. And if you are watching this replay, hashtag replay in the comments so that we know you are watching it. Awesome. All right, so let's get started with the first question.
And are we sure that the chat is enabled?
The chat is enabled.
All right, fantastic. So feel free to blow up the chat or the Q&A section so that we can read your questions live.
Absolutely. All right, Kyle. My husband and I want to buy vacation properties in Florida near Disney. We already bought one in our personal name and want more, but the Canadian banks don't want to lend us anymore because they say our ratio is too high. How can we move forward? Thank you so much for all the great information. Well, there's a couple of things in that post or in that question. Let's start with why you buying your personal name, number one. So, and we're going to go through that in detail in the blueprint. And like I said, our attorney is going to come and talk to you about liability protection, protecting your assets in the US and also your assets in Canada. Because if you own your personal name in the US, it means you are liable, which means everything that you own in your personal name can be under a lawsuit. So if someone decides to bring you to court for XYZ reason, they slip and fall on your patio, and they decide to sue you because they can't sue a corporation, it's your name. Well, they can sue you for everything you own in the US and everything you own in Canada. So even if you can buy US properties in your personal name, should you? We will say no. We will say this is a huge liability. You do not own any US real estate in your personal name. Besides, it's also easier to get lending when you have corporations and the right setup in the US as a Canadian. But moreover, it protects you from liability in the US, but also liability in Canada. Guys, we're neighbors, right? So it's easy to go after your assets here in Canada. So one, do not own your personal name. So for that person who sent that message to me, get it out of your personal name. We're going to have our attorney come and talk to you about how to do that and get your asset out of there, first of all, out of your personal name into the right entity structure. And second of all, don't use Canadian banks. They lend based on your personal credit. You're going to be tapped out. It's going to be it's very soon you're going to be tapped out. Use the asset-based lenders that will recommend you to you in the blueprint. Again, we have one of our brokers, our star brokers, that is coming on to talk to you about lending, how it works, the terms, the conditions, how it works for foreign nationals, how easy it is actually to get financing in the US, and it's not done under your personal name. So even if you have no or little income, bad credit, it doesn't really matter. So voila. Do you have anything to add to that, Kyle?
Well, actually, there's some couple of questions that came into the Q&A just now. It's from Anonymous, but their second question has to do a little bit with what you're talking about. The question is, how do you deal with the tax and avoid double tax? And then a question about how does 1031 exchange work for Canadians? So this is just re-emphasizing why you want to deal not in your personal name, but also in corporations to take advantage of the right corporate structures to minimize your taxable income on the profit you make in US real estate. Now, if you do it the wrong way, and we talked a little bit about that yesterday, the LLC trap, right? If you use LLCs the wrong way, which if you're not being very closely advised by cross-border legal counsel, it's very, very typical that you are using them the wrong way. You will get double taxed because the LLC is not an entity that exists in Canada. And so the US-Canada tax treaty cannot apply. And so we get taxed on both sides, hence double tax. But if you structure it correctly, double tax does not apply because there is a tax treaty between Canada and the US. We just have to make sure that the income is being reported at the same level on both sides of the borders. Starting to get technical already, but that's why we're bringing on the legal counsel for you at the blueprint so you understand all the finer details as well as the big 30,000 foot overview headlines.
Correct.
1031 exchanges, maybe we can get into that real quick. Bottom line, it doesn't make all that much sense, right? In a couple words, that's what you need to know. Can you do it as a Canadian? Yes, you can in the US. But again, there is no equivalent for the 1031 in Canada. And so ensure your capital gains tax will be deferred in the US, so you won't have to pay the taxes, but you have to pay the taxes immediately in Canada because that strategy, that piece of law doesn't exist in Canada. And so again, it can't apply the equivalence. So you'll save it in the US and pay it in Canada. So very little, very few scenarios where that makes sense to do.
So should you? I mean, the answer is probably no. Now, unless you get a visa at some point, then you'll be able to do it. But it's a tax law for Americans. And we know a couple of people that got caught, Canadians, doing the 1031 exchange, not doing it correctly. So we would advise against it, but speak to your tax specialist. But all the people that we've consulted, all the tax specialists and the attorneys in that field do not advise it. So very good question. Okay, let's see. Perfect. Next. We have from Kimberly, how do you structure your business to reduce the double taxation? Is there a way to avoid the double taxation and reduce the tax burden? So yes, and that's what Kyle just said. And also that's what our attorney is going to talk about at length, about 90 minutes in the blueprint. But essentially you have to have the right entity. Yeah, you need the right entity structure. That's how you do it. And I just don't want to go into that because Bob goes into that in detail and he's really good at it. So make sure to attend the blueprint, and just that alone will save you thousands and thousands of dollars on top of protecting your assets, protecting your personal property, everything that you own and everything else.
Absolutely.
All right. Rory is asking, my wife and I are looking into the short-term rental or theming business or strategy to close to Disney. To run the numbers, we're wondering if it's possible to have access to a spreadsheet that covers the Airbnb numbers that can be shared in the community or group. Thank you. So yes, absolutely. Again, you will receive the analysis software in the blueprint. So this is something that you will get, absolutely. And we will go through a lot of examples in the blueprint on how to analyze a deal, how to make sure that your cap rate is good and convenient to you, how to, like, everything is laid out in the blueprint. The cost of theming, the average cost of theming, how much you could expect on the back end once it's themed. We go into that as well. And obviously we look into the numbers. Yes, absolutely. All right. We have someone asking about RSPs. Let's go into that. And I think in the Q&A as well. So let's just mingle these together. All right. I have already used my RSPs to invest in my primary residence. Can I still invest in the US with my RSPs? It's a very good question. So it's not the same program at all. It has nothing to do with the WRAP program in Canada. It's a complete different program. And again, we're bringing on a specialist that will talk to you about it during the blueprint. But essentially, you can use your RSPs if you still have RSPs. You can use the RSPs to invest in the US, so long as it's not for a primary residence. So anything, vacation home or an investment property, you can apply the strategy. It's absolutely fantastic. And the returns are incredible. And just to give you a little idea, I used to have my RSPs in the stock market, just, at risk, because we were investing in the US in properties, and I didn't really see a need to put those RSPs at low risk, right? So basically they were at high risk, and now we used our RSPs to invest in a property in Florida, and I'm paying 8%. So I'm getting 8% back in my RSPs fixed, which is really cool. And again, I don't want to go into too much details because our specialists will go at length, but it's incredible. It's incredible what it's doing. And now my RSPs are getting 8% flat rate every year. It's not backed by the stock market, it's backed by my own property, which is really, really fantastic.
And for those who are just trying to, what is Janie saying here? How is she getting 8% if she used her RSPs to buy a property? That's the beauty of it. You're tapping into that dormant liquidity that you didn't know was liquid, and then poof, that capital is used as a down payment for the purchase or even potentially for the renovation of this US property, and yet it still grows at a rate of 8%. So more to come in that. And the question we have in the Q&A is, do you mean taking out $35K allowed to purchase a home? So actually, how much you can use of your RSPs will depend on if you are an accredited investor or not. But basically, everyone is pretty much allowed to go get up to 100,000 of their RSPs without very many questions asked. If you want to go get more than that, then being a sophisticated or accredited investor or being part of the JK community will help you unlock higher amounts should you want to.
Absolutely. So very good question. Yeah. Yeah, that was a nice surprise for us last time. Okay. Again, to the RSP question, I had someone say, how does the RSP strategy work? My bank says it cannot be done. So it's a new strategy. We were the first ones to do it ever. And then we've had a couple JK members actually do it, after us. So it works, but it's brand new. So if you just walk into any bank and you say, I want to use my RSPs to invest in the US, they're going to look at you like you're crazy. Go to the right people that are actually doing it. Now, the people that are doing that in the US, so, taking your RSPs and invest in the US, they've been doing it for many, many years, but just in different countries. And it works fantastic. So they just didn't have people wanting to do it in the US. Nobody asked them until we did. And they've crafted a whole program and it works wonderfully well. And our JK partners and members are doing great with it, which is really cool.
Absolutely. And more questions are coming in from the chat here. Peter says, what if someone's over 65 years old, if it's in an LIF or an RRIF? Once very few locked-in programs are truly locked in, but it is case by case. But we haven't hit one in our group yet that we were not able to unlock. There are some that are unlockable, like for real. There are very few of them. We haven't encountered one yet, but in theory there are. So that answers that for Peter.
But our recommendation is just come to the blueprint. You'll have access to the person who talks about RSPs, and then you'll be able to ask your question there. And she's a specialist, so she'll be able to answer you during the blueprint. Yeah.
Absolutely. And Chris is continuing. Can use someone else's RRSPs. Again, we're going to cover that in the blueprint. But bottom line is, if they are part of the deal as an equity partner, rule of thumb is that's pretty much the only way you can use it. Not so much as someone else being your bank just for a passive private investor.
There's other ways to use other people's RSPs, but just this strategy that we're talking about is specifically for your own or your partner's RSPs, but there are ways to use other people's RSPs. Yes. Very good. Okay, so let's see here. I just want to prioritize the people that have questions in the comments. Another question is, how do we prevent getting sued? It's a great question. Well, come to the blueprint. Come to the blueprint. Come to listen to our attorney talk. He'll tell you at length, again, 90 minutes of how to not get sued and how to protect your assets, yourself. He goes into that at length, how to, and why would you be not sued is because this entity and the way it's built and the way he explains it is not bulletproof, but it's very close to. So that's what I would recommend. Just again, the price of the blueprint is less than just a consultation with that attorney. Excellent question. A question in French. Je parle français, je vais investir en Floride, que me conseillez-vous? So I speak French and I want to invest in Florida. What do you recommend? So we recommend, I'll say it in French first and then in English. On recommande de faire affaire avec quelqu'un qui parle au moins en anglais. Donc, ayez un partenariat ou soyez avec quelqu'un qui parle au moins l'anglais. Mais en Floride, il y a quand même plusieurs personnes qui parlent français, des agents d'immeubles, lenders, plus ou moins. Mais il y a du monde, là. Il y a du monde en Floride qui parle français puis qui parle anglais. Fait associez-vous à ces gens-là. On est évidemment francophone et anglophone, donc vous pouvez aussi vous fier à nous. Mais c'est ce que je recommanderais. Donc, c'est vraiment de trouver du monde autour de vous qui parle la langue pour vous permettre de faire les offres et d'aller de l'avant, mais aussi qui vont être là pour vous, tout en français, mais aussi en anglais pour que vous puissiez aller de l'avant et pour pas que vous vous fassiez avoir dans le fond. So just to go back in English, I recommend to associate yourself with people that speak both English and French because, well, you want people to understand obviously the language, to be able to be there to, to interact with contractors, with the banks, with the lenders. So ideally you want someone that does speak the language. We obviously speak English and French. So if that's something of interest, by all means, we're more than happy to help you through that. And I think that was it. And I was saying that there's a couple people in Florida that do speak French. So there's quite a few realtors, quite a few people from Quebec moved to Florida that build a life for themselves, you know. So quite a few people do speak French and English. So there are, you know, if you open your horizons a little bit, you'll get to see that there's more than one person that has that qualification. Good question.
Excellent,
Alright.
excellent. We still got a queue. Perfect. So from the Q&A, anonymous again, but I have the ability to refinance my home and get $300,000. Wonderful, congratulations. Would that allow me to buy a turnkey duplex and duplex in cash? Yes, it definitely would, multiple at that. And do you think it's a good idea to buy cash, or am I better paying minimum down payment and getting a mortgage? So that question has to do, one, with crunching the numbers. What are the current interest rates? Interest rates have gone up. And so, you know, if you have an ability to have a strong cash posture and get a much lower purchase price because you're throwing cash, you can go in faster without subject to financing clauses and all that. You might get a much better deal up front, and then take the time and you know, scout out different lenders, different refinance lenders to get some leverage into your portfolio after the fact. But with 300 to get started, you can make a good dent. It's almost 10 times as much as we had to get started, and I think we did not half bad. So you are in a position to jump in cash and then take the time and scout out the best refinance options if you do want to bring leverage to your portfolio.
Mhm. And I'd add to that as well that, you know, buying cash is great. And then looking at the refinance process is also great, because putting mortgages on properties also decreases your liability. And that's something that we'll talk a little bit about in the blueprint, and that our attorney can definitely help with that, because there are ways around that to really, basically what you want in the US is to look broke. You want to be rich, but look broke. That's on paper, that's what you want. So there's definitely ways around that. And that's what people are looking for, people that have money to stoop. So if you look broke on paper, they won't want to see you. So there's different ways around that, and we'll talk about that more in the blueprint. Excellent question.
Very good question so far. Keep them up, keep them coming.
Peter says, was just wondering, do we get a tax receipt saying they attended a US real estate investing seminar course, and the course fee is $555? Yes, well, you should have gotten an invoice. So if you didn't get it, either check in your spam or just email us and we'll make sure to send it to you. But it's a deductible expense, even if you don't have a company in the US yet. Those are part of your starting expenses. So it's everything that's education related, seminar, mentorship, all that, travel, if you know, even if you don't have a company yet and you're traveling to, say, you know, to Florida to go see some properties, all those are deductible expenses. Even if you don't have a company yet, something, it's what's the word, Kyle? Like it's pre
it's startup. It's startup.
Right, so exactly, that's the word I was looking for. Thank you. It's startup expenses. So totally perfect.
Absolutely.
All right.
I love this question, Chris. Do you feel Cleveland is still a good market? The reason I ask, I have family there. Okay, now, Chris, absolutely, Cleveland is still a good market. There's an article that came out, what, a month and a half ago. Cleveland is actually, according to that that article writer, is the #1 rental investment market in the States right now. So very, very exciting for that. And if we're still in the market, that's where we started. We've expanded beyond there, but we're still there. If you were on yesterday, you know that we just closed the deal yesterday in Cleveland, and absolutely, it's still a good market. It all depends on the numbers. And if you've got family, that can accelerate and complement and catalyze absolutely everything, because maybe those family members want to be involved passively or actively. You may get better financing if they're getting involved. They could be some boots on the ground for a small fee. They know people that they trust and they can recommend. You've already have the beginning, or maybe a full-on power team waiting for you there if you've got trusted family on the ground. Just another advantage. You don't need it, but if you already have it, well, it would be silly to skip on by that.
Yeah. Trina said that she used a HELOC and she purchased 2 duplexes and 3 single-family homes. She used 250,000 Canadian to do that. 2 duplexes and 3 single-family homes. Congrats, Trina. That's
Not half
amazing.
bad at all.
That's amazing.
Cheers.
Cheers, cheers, cheers. Trina, cheers. There's a lot of people sitting on a lot of equity. With COVID, prices of properties went up, and if you do have a home, most likely there's got equity in it. So it's one way to look. And Kyle mentioned it yesterday, and there's how many? 18 ways, Kyle? That we're gonna 19 ways.
19 COVID-19 ways.
19 ways to find money, and HELOC is definitely one of them. It's a good place to look.
Yeah, in the blueprint, I lead an exercise. You're richer than you thought. No
How much
trademark.
money did we find last blueprint, Kyle?
I think we were at about 1.5 million that we found right on the call with the participants, just in a couple of minutes.
That people didn't know they had, because
Didn't know they had.
people had money, and then that was like the extra of what people didn't know they had. Which is pretty cool.
Yeah, powerful stuff.
All right. I want to only buy 1 or 2 properties in Florida. Is the blueprint good for me? Absolutely. And the reason we're saying that is, well, we said it earlier, but don't buy in your personal name. So the first thing that most people do when they think Florida, I'm going to buy myself a second home and rent it, when I'm not there, is they go to the Desjardins Bank or Scotia Bank or wherever, you bank, get a US loan, buy a property in the US. Yeah, but all of that is under your personal name. And the first thing we say is we don't recommend you to buy into your personal name. Again, there's a good way and the bad way to invest in US real estate. And if you buy using your personal name, you're on shaky grounds. You're putting everything at risk, Whether you own in Canada or the US, you're putting everything at risk, and your family and your legacy. Don't do that. Don't do that. So even if it's just for one property in the US, $555, and you'll learn about liability, you'll learn how to buy correctly, you'll learn how to set up everything, you'll learn taxation, you'll learn the lenders, you'll know everything. With just even one property, it's worth it 100%, because then you're putting yourself in a position where you're starting on solid foundation, and you're not putting yourself and your family at risk. You're not jeopardizing anything that you have. So for 1 or 100 properties, this is the place to start.
Absolutely. And about 18 months ago, Jeannie and I were in Mexico, and we've been hearing about, and RBC was actually promoting US loans, for US second homes and even US investment properties. And I was like, and I'd been hearing it a little while, and people were looking into it on the communities. You know what? I'll sit down and I'll go through their their little series. I think it was a 5-part series, something like this. And I don't particularly recommend going through the series. Very, very little information of use. But the point was that apparently they had this program. So I went through it and I called them up and I started inquiring. And their criteria was very, very particular. They needed certain minimums. Their rates were not crazy good either. But the worst part is, like Jeannie was mentioning, I inquired, like, can we do it, in a business? And they didn't even understand almost the question. It was like, by default, you were going to buy it in your personal name. I'm like, no, nuh-uh. We teach Canadians exactly not to do that. And your first response is, yep, just buy in your personal name, off we go. And we're like, no, you've got to change that. Like, I got almost angry at this person. I say, like, who's in charge of this program? We have got to educate you. We got to change this, okay? And I just kept hitting walls after walls. So even though they're offering this type of product, they're just looking at it from the bank's perspective, issuing a loan, putting a mortgage, but the whole asset protection, the whole liability protection, and the whole accounting even that's not what they're looking at, right? And we need those pieces to have a well-rounded and as safe as possible investment in when we're doing this cross-border investing.
Absolutely. Canadian banks look at it like this.
Yeah.
You can't go into something and just be like this. You have to know what's going on around you. Otherwise, well, you can get hurt.
Big time.
Yeah, big time. Absolutely. And we're not saying this to scare you guys. We're not. And there's a reason why there's the blueprint in place, so that you get the information so that you don't hit a wall. Because buying in the US, I said this, I don't know how many times, and I'll say it again, it's changed our life. We bought 42 properties, 42 doors in 3 years. Had we had a blueprint like this, it would have gotten us there a lot faster. But 3 years, 42 doors, we were financially free, retired. And since then, we just exponentially grew. We've been almost investing 10 years in the US. So it's changed our life, and we do it all over again. Just don't do stupid mistakes, especially if you know them up front. Just don't do that.
Well, let's
And
not say stupid mistakes. Let's not do ignorant mistakes, right?
Well,
Because
okay,
in a
right.
good way and a bad way, and you don't know what you don't know. That's why we put the blueprint.
Exactly. You don't know what you don't know. Yeah, that's a better way to put it. And yeah, absolutely. But
Uh,
if you do it after this conversation, I'll say that's a stupid mistake.
There we go. And so Pramil is coming in right in with some questions here. How do you structure so you don't get double taxed? Is the LLC the best vehicle? So be very, very careful with the LLC. You can use LLCs in very specific multi-tiered structures. It can be used by Canadians, but in a very specific way. And this is starting to get technical already. So that's why our attorney comes in to explain when it can and when it can't. But what I'm telling you is if you're buying rental real estate and you just have an LLC and you're Canadian, that is not a good way to do it. Okay, if that's the only company, the only entity you have, right? Big red flag. All right, Pramil, hopefully that's clear enough for you.
And again, Kyle said it, but I'll say it again. It's not recognized. LLCs are not recognized in Canada. An LLC in Canada is recognized as a corporation, not as a flow-through entity like it is in the US. So if you're taxing as a flow-through in the US and then you're coming in Canada, it's taxed as a corporation. It's not the same tax treaty. There's no tax treaty between both. So again, the attorney is going to talk about that at length. So make sure to come to the blueprint.
Are we keeping an eye on the Facebook chat, Jamie?
Yeah.
Okay,
Yeah.
good.
All right, so Marianne, salut Marianne. I would like to know if it's better to buy a more expensive home or two less expensive homes.
Show me the numbers.
Well, it depends where, right? Depends where, like a more expensive home in close to Disney themed versus an expensive home in Cleveland. Like I'd take two less expensive homes in Cleveland, two duplexes, for example, in Cleveland, over an expensive home in Cleveland. But if you're talking Florida, it's another story. Like it depends on the market, it depends on your strategy, it depends on how much money you have to invest. It depends. Fortunately, that's the answer.
One thing we cover a lot in the blueprint that I repeat often is to invest as safely as possible. And that includes having buffers. So if you're expecting to do a renovation project that costs 50,000, you better have more than 50 available to get that project done just in case. And the same thing, if I don't want to say only, no, if you have 100,000 and your down payment is 90,000 for this property, maybe you don't have enough money to get into that property, right? So just to make sure that you're getting in with enough liquidity and enough buffers and backups to, if something were to happen, and something always happens, right? Like we're getting ready in advance so that when life happens, we're like, life just happened with a smile. We're able to move stress-free or with far less stress and just roll with the punches. And then the other part is buying the right deals, right? When you buy right, that's when you make your profit. And so you're building in another buffer by not buying like everybody else, not looking on the MLS and paying full price and all these fun things that we cover in depth in the blueprint. So what are the numbers? Show me the numbers in terms of your liquidity, your reserves, your ability to finance, the deal that's being presented. Were you able to get in with some creative terms, or this is just a simple cash deal that that's at 20% discount? Like what are the numbers? So show me something and I'll tell you.
That's a great question. Very good. Peter, that's a good question. I've never had someone ask that question. Have you come across people who joined and invested in US real estate, but decided later that it wasn't for them? How did they exit? It's always good to have an exit strategy in place. So it's the first time someone asks us that in a Q&A. Not the first time. So someone who joined, invested in US real estate, but decided to not continue. Yeah, we came across a couple people. And because they bought right, it was very easy for them to exit. So
Exactly.
you make your money when you buy, not when you sell. So make sure that you make your money when you buy. Make sure that the numbers work up front with what the asset is doing now. And if the asset, if you feel like in 2 years it's not for you, well, the asset most probably, at least covered your expenses, because we're always buying on as is value and as is numbers. You can't really lose with that. So, do you have anything to add to that, Kai?
Well, I don't want to give too much specific information on our members, but I will say that there's one particular member in our community who jumped into U.S. real estate and bought a sizable portfolio in their first deal, and then along the way decided that they didn't want that anymore. But they bought so right, they put it up for sale and they sold, and they made a couple 6 figures in profit on something that they didn't want anymore. Because life changes and priorities change and so forth. So you make your money when you buy. Then you have all the options and the exit strategies you possibly want on the back end. They could have sold half and cleared off the debt on the other half and kept, half of that portfolio mortgage free. Now that could have been one way to do it. Or sell off the whole thing, or keep the whole thing, whatever, right? So yes, it happens. And so long as you stay true to the principles, buy at a discount, buy cash flow, the 2 golden rules, your exits are in place day one.
And make sure you do it in the right entity.
Yes.
Perfect. Chris is asking, can you assist in finding private lenders to buy in the US?
Yeah, we can, and we will. That's we are bringing one of our number one broker for asset-based lenders in the States during the blueprint. Coming in day one, afternoon of day one. So right up front, you will have that contact, and they open up the first full trolley of lenders for you that you can tap into the US.
And I'll add to that, the analysis dashboard, the dashboard that we give you in the blueprint, the one that we personally use, has different categories in it, and everything's there if you want to start talking to people, to get into partnerships, to offer a JV. You're going to present that dashboard with everything that's in it, and it goes very well to present a deal to a potential investor. So you're going to get to use the dashboard and the blueprint and keep it, and just recycle it and put in your numbers with all the properties that you're looking at, and show that to a potential lender or a potential partner. It speaks volumes. Very good. Someone's asking, I am only partially available for the blueprint. Can I still join? Will I be getting the recording? So that's a great question. Yes, everything is recorded and edited and will be uploaded in your JK portal. So after the blueprint, give or take a couple days, you'll get access to the blueprint again for a year. So you'll be able to review everything for the next year. No problem, no problem. And for those of you who have been to a blueprint, we've been thinking about ways to get you, if you haven't bought US real estate and you're still thinking about it, we're cooking up something for you guys, and we'll probably have something very interesting for you tomorrow. So keep posted.
And that's going to be on Facebook, right? We're going to post something
on Facebook, yes.
Beautiful. So if you've already attended the blueprint in the past and you're thinking about re-attending, because we've added a whole other day now, most likely between the last time you joined and now,
and
plus the RSPs
and short-term rentals
and
and management.
So there's a whole bunch more. And if now you think it's the better timing because of the window of opportunity that we're talking about, keep a very close eye on the Facebook, because I think you're going to enjoy what we're going to be rolling out specifically for you.
Absolutely, I'm excited for it. And we have like 5 more minutes, Kyle. So one more question is, can we really get financing in the US?
Oh, yes. Oh, yes, you can. It's actually easier to get financing in the US than it is in Canada. Especially, like, if you remember my story, right? I never even had a full-time job before I retired. Okay, so I had no financials, right? And I had no liquidity. The only liquidity I had was from my student loans and bursaries. I worked during my studies to just keep afloat, and those loans and bursaries that the government gave me, I just stockpiled them. And then I was able to buy half of Janie's property in Canada, and that was my first one. And from there, right, we jumped into the US. So in Canada, there's no way I would have gotten a mortgage. No way, right? And even for what's that?
No, it's a good thing you had me.
So it helps a lot to know the right channels to go to. But in the US, and with this particular loan broker that we're going to bring to you, they are giving you access to asset-based lenders. So it's the deal by far and large, 95% of the financing criteria will be based on the deal you bring them. And that's just another safeguard for you, because if you bring an okay deal or a crap deal, they're going to say, I don't want to lend on it. And you'll be all sad. Yeah, we can't get financing. No, it's not a good deal. Find a good deal and there'll be financing, right? And that's what we teach you how to do, is find the great deals, off-market, creative acquisitions in the US. That's the Gatekeeper marketing system.
Absolutely. And since we still have like a couple more minutes, Peter's asking, it has to do with banking, so let's just touch on it a little bit. With the US real estate investment, do your LP LLC allow to do banking south of the border, or is it all done on the Canadian side? So everything would be US. So you would have a US bank account, you need a US EIN number for your business. Eventually you'll get business credit, potentially credit cards. So everything, you want to look, smell, feel like a US person as much as possible, and we'll teach you how to do that. But you want to behave like a US person.
If you otherwise,
go ahead, guys. Otherwise, we look like green little things walking around. So otherwise, we look like aliens, and well, that's what we are to the US banking system. So
if you already have Canadian entities and you're already investing in real estate, there is a way to connect it to your US entities and your US structure. That's not a problem. But the actual banking, the actual acquisitions, the actual operations will all be dealt with US entities. You're the owner as a Canadian, but there are US LLCs or LPs or C Corps, or, these are US entities. And yes, they're US entities, and so we do have to file US tax returns on those entities. And that's the follow-up question from Peter. I think it was Peter, right? Yeah, Peter. And so this can be done by a Canadian CPA that is cross-border specialized, or it can be done by a US CPA that's cross-border specialized. Did you hear this? The theme here? They really have to be cross-border specialized, because otherwise they can be completely leading you in the wrong direction, charging you too much for the wrong, the wrong information, the wrong forms, the wrong, et cetera, et cetera. So go straight to someone who knows what they're doing day one. We bounced around a lot of CPAs in our first years, too expensive, not specialized. Then we had a Canadian CPA and an American CPA, and then we tried to make them communicate, and it was a pain. So now we have one cross-border CPA who used to be in Canada. Now he's moved to the States, but it's one person, and that same person is also a contact that we can we are providing a video, right?
Yes, it's a bonus.
As a bonus. All right, so maybe I spoiled it a little bit here, but this question was too on point. So we are providing a bonus video from our CPA who's going to guide you specifically in the taxation. So he won't be there live, but you will have the information by attending the blueprint.
Correct. So very good. So that's basically it, guys, for today. So if you can make it, it's August 26th, 27th, 28th. It's 3 days, 3 full days. It's wonderful, the content, the people you'll get to meet, the networking. And if you can't make it, it's recorded. You'll have access to it. If you can make it only partially, again, you'll get the recording, no problem. For those of you who have attended a previous blueprint, and would like to join this one, stay tuned for tomorrow. We will have an announcement for you. So those are only for people who have attended a previous blueprint. So May 2024, we'll have something for you. And those of you who are looking to join us this time around, we are super excited to have you. We already have quite a few people that joined, so we're super excited, super happy. This is going to be a lot of fun. So it's next weekend, the 26th, 27th, 28th. And we don't know if we're going to do another one this year. So this is it. We usually do about 3 a year, and this is the third one. So thank you everyone for your amazing questions. Thank you for your participation. Thank you for being you, and cheers to a beautiful seminar. Thank you for being with us for the whole 4 days. Cheers, celebration. Kyle?
Cheers.
All right, everyone. It was a real pleasure. We'll see you in the blueprint. If you have any questions, you can reach out to me, to Kyle, to Trina, to our team members. We have people. Post questions in the group. Remember, if you think that you have a question, you might not be the only one that has a question. So post questions in the group. You might be helping more than yourself. And this is a collaborative space. So we're always looking to help one another rise. All right, everyone. So from Saint-Émilie, Quebec, we're wishing you a beautiful evening. And until next time, do now for tomorrow for the lifestyle
you deserve.
All right. Take care, guys. Bye. Let's dance.
Don't wait for tomorrow. Live for today. Keep chasing the sunshine and go out and play.
Yes.
Bye.